Welcome, everyone. We're ready to get started on our webinar. I'm Allison LaForgia at HousingWire, and our topic today is Unlocking Profitability, How to Navigate Secondary Market Challenges. A few housekeeping items. We'll be having a Q&A session towards the end of the webinar, and you can submit questions at any time by clicking on the Q&A icon on your screen. Also, HousingWire will be sending the webinar recording to all registrants in the next 24 hours. Now I'll hand it over to our moderator for today over at MCT.
Well, thank you. Really appreciate it. We're just gonna jump right into to today's topic, which is basically a new way of selling loans in the secondary market and on the buy side buying loans. The platform, what we call BAM Marketplace. I'll just quickly introduce our panelists, and then we will get right into it because there is a lot of information to cover here. My name is Phil Rasori. I am a principal and chief operating officer of MCT, and we've also got Justin Grant on the line, who is been with us about 15 years and is was a senior trader and now is director of our investor services. We have one of the buyers in BAM Marketplace on the line, Angela Wooldridge, who is VP of Margin Management and at OnQ Financial. And they are an extremely successful buyer on the platform and has been great. Has been one of our key kind of initial buyers. That's really helped really helped the platform kind of transform the way the way we're able to sell loans into the secondary market. And we also have Genesis Collins, who's vice president of capital markets at Alpha Mortgage, and he is a client of MCT and is a seller. Current seller on BAM Marketplace. And so he'll have a lot of interesting insights on and, kind of be able to tell us some of his experiences that he's had on the platform. So just getting, quickly into the agenda here, we're going to talk about, recent challenges in secondary execution. We'll talk about how the current kind of historical traditional loan sale process has been affected by some of the market disruptions that occurred in 2020 and continue to occur now, and then talk about BAM Marketplace and the open loan exchange that we believe it creates. Talk about our security spread commitment, our patent pending security spread commitment that we're real proud of, that we've seen kind of remove the constraints of approval status between a buyer and a seller, and the real main driver there of efficiency. And so I think I'll just jump right into it. Basically, just to cover some not to go too deep into 2020, but basically we had coming through the market volatility of March and April, there was substantial disruptions in the correspondent aggregator purchasing market. So, as you guys know, coming into beginning of April, late off of the second half of March, we started to see aggregators back off of low FICO government production as the cash outs were orphaned by FHFA initially. We saw large aggregators, some of the largest aggregators in the country, back out of cash outs. And this created, massive disruptions in for certain products. In addition to that, there was just massive disruptions in aggregator execution in general, right? And I don't have to rehash all of the issues that we've talked about on numerous industry webinars that most of you guys on the line have probably been on. But the bottom line is that there was an aggregator execution crisis in March and April, and it combined with some margin calls that occurred because of the Fed trying to support the TBA market. That really created an existential crisis for frankly a large portion of independent mortgage lenders. And so during that time, MCT, we at MCT were frantically trying to get as many executions as possible for our customers, primarily our customers that were only aggregator sellers, right? Those customers that did not have the agency outlet, that saw their margins completely evaporate, and then these pipelines go substantially underwater. And again, totally understandable from the aggregator's perspective. We're not faulting them for that. Obviously, there were obvious reasons from all the lockdowns and we're all there was massive disruptions. But the bottom line is that we had to look for as many executions as possible. And one of those additional executions that we were able to find was basically clients that had potential openings for correspondent volume that weren't historically correspondent buyers, were able to there was a margin ability for the buyer that they didn't have to compete with the normal aggregator pricing, because aggregator pricing had just been destroyed in March and April. And so by May, Justin, myself, Andrew Rhodes, Curtis Richens, a bunch of us at MCT had been working on a platform to basically marry up clients that were not necessarily already papered up through an MLPA. But we were able to get some clients to buy other clients' production, clients that for the most part were agency approved, buying production from clients that were not agency approved. And so that was obviously that platform, which we now call BAM Marketplace, and Justin's going to talk about that in depth in a second. That really was, as I've just described, really born out of necessity, and really mainly for these products that had very, very limited liquidity. And so, fast forward into 2021 here on the screen, I'll skip down to the second sub bullet point. Obviously, the SHIP loans, the second home non-owner, second home investment property loans, are kind of a key issue right now. And that's created all kinds of interesting disruptions, right? I won't spend too much time reviewing, but everybody knows that you've got these percentage caps, 7% caps that everybody needs to be indexed to for these loans. And the fact is that the industry as a whole is over indexed. And so from a standpoint of execution, for a lender selling into the aggregator market, it presents some interesting opportunities, because buyers who are potentially over indexed at the agencies will need to, frankly, potentially drop their margins substantially on the buy side and get very aggressive on the owner occupied production to increase their denominator to reduce the ratio down. So these disruptions create interesting opportunities for a market, for a marketplace platform, like BAM Marketplace. But and again, the third bullet point here, we've heard, at National Secondary, by Director Calabria there, that there could be, more of these, on the way here. Cash window limits, it gets a little bit more technical. But the bottom line is that as you have more buyers, or agency sellers, I should say, move to a model where they need to securitize instead of execute to the cash window, you have more buyers that need to complete securities. And what I mean by that is, on these specified pools, there are volume limits. There might be $1 million threshold, or a 20 or a 25 loan minimum that might need to be hit. And so this enables a buyer who, let's say, has 18 loans and needs those final two sub $85,000 loan balances. It enables them to pay through, what a normal buyer, or a traditional buyer, a tier one buyer, might actually pay, and kind of to complete that volume for the securitization. But basically the traditional process, everyone on the line really understands the challenges that I kind of just described. The limited liquidity is simply, and when we speak of limited liquidity in this context, we're simply saying that you have a traditional, approved investor set. And if there are other buyers, let's think for a second that let's say there's 200 organizations in the country that could buy closed loans. If you were approved with 20, that means that 90% of the organizations you're not approved with. Now, they may not be anywhere near competitive for the vast majority of your production, right? But in a time of market disruption for certain products, they may become become very valuable. And so that's where the current process, compared to what we're describing as kind of the new paradigm in selling loans, the traditional process is far less efficient and provides far less liquidity. I think with that, I'd like to kick it over to Justin. He can kind of explain what I've been talking about in a little bit more detail with regards to what we're doing here with BAM Marketplace.
Yeah, thanks, Phil. Really with what we're trying to do with BAM Marketplace is pinpoint those weaknesses, for lack of a better term, in the traditional loan sale process. For most of you lenders out there who are on the phone, and the first just starts with transparency, visibility of the pricing that's out there. At MCT, we see our average client is approved with about 16, 17 different investors, but as a whole, MCT's entire client base, we see consistently over 50 different investor buyers out there, and it's only growing. Since 2013, when servicing asset kind of really came in vogue, and where bulk bidding really started to take off. Ever since then, we get years where volume's down a little bit. We think that the number of investors is going to contract. It really doesn't. It's only increasing, as technology with platforms like ours that allow the that really help facilitate all those data points. And as you know, it's forcing buyers out there to get more granular, but it also allows new buyers to come in who want to target niche products. So, you know, the key being, how do we get visibility to all the executions out there for a lender that might only be seeing a small subset of that? So that's what we're doing with BAM Marketplace, right? And that's yeah, that kind of takes us into the bidding regardless of approval status. So clients can opt in, meaning they want to show their bid tapes to participating buyers out there, you know, to really make sure and see if there's you know, there's potential relationships that that make sense. And so we'll kind of get into how that gets facilitated. But in, you know, Phil mentioned this was really born out of necessity, and in doing so, because this traditionally started with your correspondent investors, or I should say new lenders who were didn't have much experience in correspondent, or had experience but were just opening up the channel. You know, they need bidding tools that allow them to number one, efficiently price loans. Because now if you're a buyer like OnQ, and we'll have Angela speak to this in a little bit, but you know, if you're a buyer, now you're not only facilitating the bids for your approved counterparties, you're facilitating bids for, in this case, all of MCT's clients who have opted in, which you know, just you know, by a huge factor increases the amount of tapes you're having to process. So we knew we need to be able to provide the technology to allow our buyers to quickly and efficiently price the vast number of tapes that are out there. And that just goes into our goal of having every loan priced to every investor. Again, it's about transparency. You know, making sure you as a lender who's selling their loans has visibility into pricing for, you know, with all outlets out there. From the buyer side, you know, really just getting that exposure, being able to market your correspondent channel efficiently and very quickly, you know, to be opportune in times like, you know, when COVID first hit, and now, you know, with all the PSPA announcements per Calabria, and BAM Marketplace really really facilitates that, being able to expose, you know, you as a buyer, your price to a huge number of potential prospects to get signed up. So, and you know, another great thing, a lot of you MCT clients on the phone have known MCT, you know, really since the bid AOT kind of came into existence a couple years back. I think in 2018, we had the likes of Franklin American and Wells Fargo are kind of the first to try and introduce those, and you know, the PennyMacs and the Marahomes and Mr. Coopers of the world that offer this. UMCT clients know and have experienced, most of you have experienced using the assignment of trade through our platform, right? And how easy we've made that, where, you know, with the traditional legacy AOT, you know, back in the day, you had to fill out tri-party for every assignment that was done, and then you had to print it out, sign it, and then in some cases fax it back to the investor. I mean, a really cumbersome process, and we've completely automated that. Really, you know, you as a seller, all you would do is load your signature in, and when you're requesting commitments with buyers that are taking assignments, you know, that pretty much there's no extra work outside of choosing your trades to assign. MCT kind of takes care of the rest. It's great for the participating buyers too, because a completed tri-party from the seller standpoint, you know, is already pushed over to them. There's no need to hunt hunt these down, days later as they're trying to verify trade. So we've extended that great, AOT automation into BAM Marketplace for those buyers, looking to offer assignment of trade. And at MCT, we know we've got a lot of our seller clients who are definitely leveraging that for obvious economic reasons and other reasons out of economics. So we push those AOT functionality into the marketplace to really provide that to all those folks out there looking to take advantage. And then last bullet point, really one of the other, I would say, key aspects of the marketplace is just the streamlined, investor approval process. And we'll talk about this a little bit in more detail on the next slide. But, really in being kind of the central marketplace, bringing together prospective buyers and sellers, we're in a great spot to facilitate the exchange of those MLPAs and correspondent applications and all the relevant contact info so that, when a seller is interested in, at least engaging with a prospective buyer, they've got that right at their fingertips, as well as everything that's needed to kind of get the ball rolling from the buyer side to get that approval finalized. So, we're just kind of getting started there. Before we kind of get into, how we accomplish this, I set the stage a little bit for, what we're trying to do with BAM Marketplace. I wanted to bring in some of our panelists here just to, give everybody a sense of how they've been able to leverage the platform, both from a seller and buyer perspective. So, Genesis, why don't I, pivot to you first? I mean, I think you're a fairly newer MCT client. I think, right? You guys came on maybe about a year and a half ago. Is that right? You started with MCT.
Yeah, we came on about a year ago.
Yeah, and I think pretty close to coming on, you guys started taking advantage of BAM Marketplace, and maybe just talk a little bit about your overall experience and some of the things you like, as a seller looking for really looking to make the loan sale process as efficient and economically beneficial as possible.
Sure. So back in July of last year, Alpha Mortgage transitioned from a best execution model over to a mandatory, which is why we got signed up with MCT. And right away, we took advantage of the BAM Marketplace just to help us find out what other investors are out there and what they're paying for. Pricing comes through on your bid table. Yeah, and other programs with those investors as well.
Yeah, I mean, it sounds like, in July, obviously, we're kind of out of the throes of the scary months of, March, April, and even May. But, we still weren't out of the woods yet. And I think, a lot of cases you had, some of those certain types of loans that Phil mentioned there, right? The low FICO govies where, you had a lot of traditional, your existing aggregators that, weren't quick to open that back up. So I would imagine that, was probably pretty helpful in finding some additional outlets for some of those products at the time.
Exactly. So as COVID initially hit, everybody was clamping down on FICOs, especially in the FHA space. It really helped out there because even into the summer months, you're still having those restrictions by your aggregators. We were able to still find through the BAM Marketplace outlets where we could actually get a decent price on those loans. And even Now, this year with 2021, we have the struggles of FHFA and the 7% cap. Alpha Mortgage, we are a coastal real estate lender. So a huge portion of our volume is second homes, investment properties. BAM Marketplace right now also gives us another outlet for those loans at a competitive price.
Yeah, that's great. Yeah, thanks. And, I want to get Angela, your take as well. I mean, we've probably got a lot of lenders on the line here, who don't often get to hear from an investor, get their take on the buy side. I mean, tell us about your guys' experience. I mean, you guys, when you got started back in, May or June of last year, I think you guys had just started your correspondent channel. I think you were just hiring your first salesperson for correspondent. So maybe give us a little bit of your guys' experience and how, with the tools, but also the exposure to prospects, how that helped you guys.
Thanks, Justin. Yeah. So we did actually start back in May of June of last year. On the brink of the pandemic. And MCT, it really helped with the exposure for OnQ. We definitely appreciated the ability to shadow bid on non-approved sellers. It really gave us essentially a marketing opportunity to get our price out there. And as Genesis said, from the seller's perspective, looking for those axes for the low FICO Govy when COVID hit and things like that, we were able to expose OnQ as a potential outlet for things like that. And having that ability definitely fast-tracked a lot of sellers for us. The margin granularity is another really key component that OnQ utilizes and appreciates with MCT, the ability to drill down into those specific FICO buckets or property types or LTV buckets, note rate level, product level, all of those things. And then, MCT also offering us as a buyer rankings on shadow bids and allowing us to grow our correspondent business and hire account executives and actually send them data and say, this customer let us shadow on their tape and this is the results that we're seeing. So reach out, let's have a conversation. So our experience with MCT was really about exposure, and it was a great thing for us in launching our correspondent platform.
Yeah, and I would imagine, that's one of the things, with just getting into correspondent, right, is, kind of traditionally it's you've got, large upfront costs. Like you said, you've got to build a desk, you've got to find, the bidding tools, whether you're going to spend money and do that in-house or search for a third-party provider like us, and then, hire national sales teams. All without, really knowing how competitive your price is going to be. So I would imagine, with starting out all the color, even though you're just getting started out and, signing on your first couple of sellers, getting all that color, just to give you guys feedback. And we're talking about billions and billions of dollars every month that really allows you guys to, take that color and continually fine tune your price to be competitive.
Yes, absolutely.
Yeah. So I know going into this next slide here, everybody's probably wondering how the heck we actually, Phil, do you want to go back one? I want to talk a little bit about how this is actually, how BAM Marketplace is facilitating this, because I'm sure, most of you out there are wondering how the heck, non-approved counterparties can actually transact with each other. And so really that's through the security spread commitment. Obviously you don't have an approved counterparty between buyer and seller yet when we're looking at all of these live bids from somebody like an OnQ. And somebody like Genesis at Alpha Mortgage submitting their bid tapes. So how does this work? Really, we're taking that security spread, and it's really a handshake agreement between buyer and seller, where if Genesis at Alpha gets a bid from OnQ and he's not approved yet, and he sees, they bid a 105 on the Smith loan, and OnQ has slotted that into a security that's currently trading at a 104, that's just a 1 point spread. That's the 1 point security spread. And so if Genesis sees that price is looking good, he can basically kick off the relationship with OnQ by submitting that security spread commitment. And that does a couple things. Number one, from the seller standpoint, from Alpha's standpoint, it's going to give them a lot of confidence in that quote unquote shadow bid from somebody like an OnQ, that's an executable price. I know a lot of you on the line out there have done shadow bids. Shadow bids have been out there, really since bulk bids have been out there. This kind of takes that to the next level, where it gives you as a seller confidence that, hey, this is actually an executable price, and I'm not going to see pricing soften, and pull back once I actually go through the process of getting approved. So it gives the seller the confidence. Number two, it also gives the seller the motivation to get your documents in a little sooner rather than later, now that you've got a loan tied behind your commitment. And what happens is, when Genesis requests that security spread commitment, Angela over to OnQ is going to accept. Genesis is still going to hedge his loan. A final price has not been locked in. OnQ is just basically promising to lock in that 1 point spread, honor that 1 point spread once Alpha has submitted their documents and actually gotten approved. If for some reason it doesn't work out, there's no approval, no harm, no foul. Alpha continued to hedge their loan. So if there was, deterioration in the market, they're protected. From OnQ's standpoint, there's no harm there because final pricing wasn't finalized, and they didn't actually extend that commitment. But once Alpha does get approved with OnQ, BAM Marketplace, it's really easy for Angela to go in and look at her outstanding spread commitment she's got with lenders and go in and finalize that loan. And so if 2 weeks later, a week later, once Alpha is actually approved, the market has dropped off, well, OnQ is going to respot that loan. If now the security price is at a 103, we'll apply that 1 point spread, and now Alpha's final commitment price on that loan is a 104. So really, what's great from the buyer standpoint, right, is you're able to give confidence to your sellers that you're showing an executable price. But number two, we're finding it's really facilitating or expediting the approval process, since now there's a loan or a couple loans behind the commitment. And then once the counterparty is approved, it's business as usual from there, where everybody's transacting the standard way. So it's really just a nice way to kick off the relationship. And so you sellers out there, when you kick off the relationship with a security spread commitment, BAM Marketplace will automatically send over the prospective buyer's application, MLPA, contact info for the correct point of contact salesperson over there, and then same thing on the for the buyer, they'll receive the seller contact info as well. So we're helping to facilitate that connection there, to again further expedite the process. So maybe Angela, I know you've had had a little bit of experience, obviously, with a number of our clients having signed up, and I know a good chunk of those starting off the relationship with that security spread commitment. Maybe just give us a little, a little take on your experience with how that's gone.
Yeah, I mean, the process to do the security spread has definitely been beneficial, and really, really easy to use. I think you touched on a lot of the major focus of it, but it really fast tracks the approval. In your scenario, you were saying, you commit the spread to security, and then 1 week, 2 weeks down the road, you honor that commitment, which also gives, the sellers confidence that there's no price changing along the way or anything. Whatever they saw that day is definitely what the buyer's going to honor. But for OnQ's experience personally with the spread, security spread, we've been able to fast track approvals within 3 to 5 business days. So it definitely does help for, it's all about exposure. Like I said earlier, OnQ is exposed within MCT, and then we have a customer that isn't approved with us that wants to do the security spread. We go ahead and we issue that spread to security commitment, and then you provide some of the documentation. We immediately sync that customer up with an account executive. And like I said, with our experience, it's very quick. It definitely fast tracks the approval process. I do think that some sellers out there are a little hesitant to use it, and that might be just from their own functionality or whether or not they want to lift their hedge, or they can't wait for the approval. But if you're in a position where you can, and you see a buyer's price and it looks appealing, I mean, I would definitely recommend using the tool, because it definitely is a way to establish a relationship very quickly.
Yeah, and that's a good point. We have a lot of our sellers who are kicking off the relationship that way, but right, we definitely have a handful that I don't want to say are old fashioned, but they're they just want to get kicked off the traditional way. Some, or they want to make sure they fully understand it. We get it. It's a kind of a novel new process, but sellers are absolutely welcome to, and we see this a lot, where they might just see OnQ's price for a couple weeks in a row, a couple months, whatever it is, and see that you're consistent, and kind of a no-brainer from a price standpoint, at least, that it would make sense to look at getting approved. And so they can request the contact info and kick off that approval process the normal way without doing a security spread commitment. So not required, to initiate new relationships in marketplace. That's a good point. But yeah, I would imagine, some of you buyers on the line are, while there's no market risk in the security spread commitment, there's a tiny little bit of risk, right, with potential changes to servicing values over that, week or whatever the period takes to get approved, or you might have some spec risk if the loan is a low val or falls into another spec product. But a lot of our buyers are looking at it as a way of, hey, I'm willing to take that, small risk because I don't have the large market risk, on a loan or a couple of loans, to get that new, seller approved and trading with us and really expediting that process. So, kind of the risk reward there for them, has been a no-brainer in a lot of cases. So, yeah, that's good to hear. Phil, you want to go to the next slide here? I just, wanted to touch on, a little bit, we're talking the benefits, and so wanted to quantify this a little bit for the group in terms of what we're seeing. I mean, just to give everybody an idea, I think Genesis, you guys I think you're selling to now two buyers in marketplace have gotten approved with 2. Yeah, and so almost 10% year to date, right, is of your volume is going to these investors. So definitely a meaningful chunk, right? And if you look at the roughly 30 basis points that you've picked up on that volume, I mean, that's you know, a couple extra basis points to the bottom line so far this year. I mean, every little bit helps, right? Especially with what everybody's dealing with right now. You know, probably taking a little bit of a hit on their seconds and non-owners. So, you know, just how competitive the market is. Yeah, maybe talk a little bit about what you're seeing as far as, you know, some of those numbers and the pickups on some of your loans.
Getting approved with our third buyer on the BAM marketplace. The 30 bips is about the average so far. However, especially lately, that delta is actually growing a bit as we have all those non-primaries that we have to get rid of. Our traditional aggregators that we're approved with, they're over their limits like we are. So in the BAM marketplace, we're actually finding that there is still a little bit of appetite for those. And even some of our aggregators are still a little bit slow to roll back to their pre-COVID guidelines and FICO buckets. So those we're still finding a good pickup on in the BAM marketplace. And yeah, our approval process, it's only taken a matter of days. Usually we're approved before the first loan's ready to be purchased.
Yeah, that's great. And I think, Phil, if you go to the next slide, we'll some of the data for OnQ. I mean, you know, Angela, you talk about exposure. You know, I got to imagine, right? We've had some very scary but opportunistic, you know, periods just in the last 12, 15 months or so. And so you mentioned the exposure, and like I said, when you guys just got started, you were just hiring your first salesperson. You know, now fast forward in the last 10 months, you know, we've got 31 MCT clients who have gotten signed up with you. I mean, I got to imagine, you know, without marketplace, that would have, you know, they would have been you'd have been very hard pressed, you know, to sign up that many folks, especially just getting started on, you know, the sales front without having, you know, 5, 10, 15 sales folks out there that, you know, we traditionally see.
Yeah, MCT was definitely crucial in helping us grow the channel. We did launch our correspondent channel with the mandatory trade desk. And you're right, it did allow for immediate visibility, the fast tracking for approval. You can see, you know, I said earlier when we were talking about the spread to security, 3 to 5 business days. So our average is around 4 days. We're definitely bidding on tons of volume, and that exposure is just phenomenal. Our first month, I think within 60 days compared to our first month, we had increased production about 1,000% from our first month. And a lot of that was contributed to our visibility within MCT. They not only helped us find customers from the mandatory, you know, bulk trade aspect, but some of those customers that also do business in other TPO channels as well. So it's been instrumental in our correspondent growth here at OnQ.
Yeah, and then also, you know, again, beneficial for those 31 sellers. If we look on average, it's actually slightly below 4 days, the average. But yeah, I mean, you figure 4 days. I mean, that's, you know, that's virtually unheard of. I mean, with a lot of folks, it could take, you know, again, just, you know, those applications can sit on desks for months. So that's key. And yeah, I mean, the you know, all the accounts, I mean, just with what we see, the kind of cross section of the market we get with the existing investors out there. I mean, it's you know, less, I would say less than it's a little less than, you know, one new seller per salesperson they're bringing on for a shadow. And you know, you guys have kind of averaged 3 new clients per month over the last 10 months, and you know, 160 plus seller prospects you're seeing, which, you know, year to date is over 9 billion a month that you're bidding on. So yeah, again, it's you know, been a lot of color and great exposure. Phil, you want to? transition to the next one here. I guess we'll hand it back off to you here, Phil.
Yeah, no, I appreciate it, and appreciate Angela and Genesis. Those were great. That was great commentary there, guys. And you know, just going back to what Angela and Justin were just talking about. I mean, if you look at that 96-hour, you know, average or sub 96-hour average approval time, you know, over the last almost 2 decades, you know, groups have come to us over the years trying to, you know, figure out, is there some, you know, standard, is there some way to be in the middle of a transaction between sellers and buyers, to be able to standardize the process, to standardize the MLPA. And, you know, if you look at that approval time period, at the end of the day, once OnQ has approved that seller, they've now, that's just a normal relationship that has existed, you know, since the inception of correspondent, right? And so when we think of what limits efficiency, what limits execution, you know, historically of those 20 potential buyers versus potentially, you know, potentially hundreds, it's really that initial period. And the fact that a buyer like OnQ can do that approval so quickly really enables this security spread commitment to really thrive, to really work. From a buyer's perspective, from an execution perspective, if the approval process were to take, let's say, 3 weeks, this wouldn't work, because you know, there's other dials, not just the security price, with respect to servicing valuation, changes in the specified pool pay-up markets, that can come into play over a long period of time. But the fact that we're talking about a short period of time for that initial execution, that initial price commitment, is you know, is really a game changer here, because it enables a group like OnQ, like Angela's just said, to literally bid on the production on a daily basis, live bid every loan of every customer of MCT's who is opted in, you know, like Genesis from Alpha Mortgage. So we're really excited about it. Obviously, if there was no market disruption, number one, this BAM marketplace probably would still not have been created. But you know, number two, there's going to be buyers like OnQ who can be competitive across the board. But I think we can all agree, given some of the uncertainty that exists currently with some production, especially in the non-owner space right now, but also as we see these these smaller investors, smaller aggregator buyers have to transition off the cash window to securitization. I think we're going to continue to see some disruptions, which allow a non-traditional buyer to potentially be more efficient and frankly a better price than the traditional buyer on, you know, specific products. So just to kind of close out here, you know, this, you know, really MCT is about mitigating risk. If we look back at, you know, like I had opened it up in April and May of 2020, where BAM marketplace is there really to mitigate the risk of sellers, of our sellers. That's the bottom line. You know, I think that obviously best execution, you know, on the loan sales side is essential when it comes to mitigating risk. And what we're saying here by BAM marketplace is we need to be able to increase our execution set. But also wanted to talk a little bit about the execution on TBA trades. Our trade auction manager platform allows us to execute TBAs on a best execution basis. And the reason we bring that up in this presentation is that we will integrate the buying process with on BAM Marketplace with buyers like OnQ, who are working to set up AOT abilities. We will integrate that with TAM, with Trade Auction Manager. And so, as for those MCT clients on the line, as you guys know, when you execute an assignment of trade right now, the assignor to assignee portion of the tri-party is automated. So when you execute that and you hit confirm assign, it will automatically assign execute the tri-party and send it to the aggregator. In BAM Marketplace, we have the ability to automate that final step of the process to the broker dealer, where the assignee, the buyer of the loan, will basically automate their execution to the buyer of the security, which in this case is the broker dealer. And so we're real excited about that. And for the buyers on the line, for the potential buyers on the line, we'd love to talk to you guys about, and Justin would love to talk to you guys about considering opening a correspondent channel. I believe Justin and Paige Woodall will be hosting a separate webinar on that as well. Just to kind of round out here, we've got another webinar here on June 9th. We've got a white paper that you can download from our website. It's 15 strategies for increasing profitability in secondary. Would love to have you guys reach out with any questions to us here at MCT or any of our panelists. With that, Justin, I want to make sure I'm reading this correctly. I'm not missing any. Do you see any questions Q&A wise? I don't think I see any. I just want to double check that.
We can open it up to questions if anybody has any questions, type them in the chat, or Ian may have some here. Let me just pull some up.
Yeah, I've got one question from the audience here. What loan products are bought and sold through BAM?
Yeah, actually, great question. Really right now, just your typical agency conforming government product, but we hope to have some jumbo and potentially non-QM in the near future. Phil mentioned in the beginning, it was kind of your more fringe products, lower FICOs, some of those products that were in danger of some disappearing liquidity. But again, as the market's normalized a little bit, buyers like OnQ are competitive across the board. We didn't really get into this with Angela too much, but one of the great things with Marketplace is, because you have that scale, it's very timely right now with the second to the non-owners. We have buyers on the platform who are literally, buying as much standard owner occupied conventional as possible, right, to help drive down their second non-owner share. Which is, so again, your plain vanilla conventional product, we're seeing great executions on as well. But for now, just agency product.
Perfect. That's actually makes sense for a transition to Angela. Angela, would you like to share a little bit about the focuses, excuse me, of types of loans or maybe axes that OnQ has for the audience who might be interested?
Well, OnQ is definitely out there for those agency products that, you know, Justin was just mentioning. After COVID had hit and we were introducing ourselves as a new investor in the correspondent arena, one of the things that OnQ is really aggressively priced on is the lower FICO and the Govy niche. While a lot of lenders were pulling out of that arena, you know, after COVID, OnQ was launching its platform and we were saying, hey, over here, we will buy these. And I think that that has definitely contributed to some of our new customers. You know, as a whole, OnQ was traditionally a retail mortgage lender for a long, long time. And, you know, the correspondent business and utilizing MCT has definitely helped us and put us in a really good position when the agencies came out with the non-owner and second mix. You know, you can build axes and you can come out with like, you know, OnQ today, we're going to be really aggressive here in this FICO bucket, or we're going to be really aggressive on the second and non-owners because we have room for it, given that OnQ is also a huge retail shop. So the combination of the two and the overall success of the organization based on those particular axes and our ability to come in and out of the market on a really granular level has contributed to the overall success of the organization, both in 2020 and what we're seeing already in 2021.
That's perfect. Thank you very much. That's all the questions I see from the audience. I think that should probably do it, guys.
All right, well, we've come to the end of our webinar today. I just want to thank our panelists and our attendees. If you submitted a question and you or didn't have time to submit a question, you'll be able to directly contact us through HousingWire and we will get it to the panelists. Just to follow back up, the HousingWire will be sending out a webinar recording to all of the registrants within the next 24 hours, and the webinar will also be available in our Knowledge Center at housingwire.com. Thank you for joining us and have a great day.
Thank you very much. Bye,
Thank you.
everybody.
Thanks, guys.